right, welcome back, YouTube. So in today's video, we're going to talk about the recent price action and kind of get some ideas of what to really just expect coming forward here as we navigate through some of this price action. So just a brief recap here. We did get the cross between the 14 and 72, which was signaling the upward trend. We went up to around the 200-day moving average originally. That's this red line here. It got rejected back down to around the 72, but we did recover. We didn't get a death cross here. We recovered nicely, had a slight dip here, and now we're progressing toward the 200-day. Now, obviously, as we get closer here, this will be a another signal here for like the next leg up. But what we really want to focus on is this fib zone here, this 382, and breaking out above this. Now, you can see here, I'm going to try and zoom in here for everyone. You can see that we pretty much rejected off of that zone, which is fine. We don't necessarily have to break through every zone on the initial test, but overall, this is going to be the zone that's going to technically open up that next leg. And typically we've had, let's go back here in the past. The beautiful thing about breaking into this zone, if we take a look here, like back on, was this June 7th, May 20th, even May 4th, April 24th, even back in like April 14th, April 13th. Just looking, I'm just going to give you some history here for those of you who kind of wanted to follow along here. What is this? March 23rd, really anytime in like mid-March, 16th, 17th, 15th, even initially March 2nd. Whether the coin was going up or down, this is typically what you would call a gap zone for the actual coin. Yeah. So typically there's a lot of volume when we are entering this zone, right? Whether that's from the upside or the downside, there's a lot of volume. So this zone normally fills relatively quickly. That's why I'm making the case saying that, hey, if we ever to break into this zone, more often than not, we're going to have a lot of volume. So this should give us that leap here to around the 16 cents level. Now, I will say, outside of the original ascension, we had some typically like in the upper 16s, around like this low 17-cent range, 17 cents range. We've had some like I can say rejections here, but the last time, pretty much our peak last time was around like 1748. So that's going to be, you know, if we're talking about like the next leg up, possibly even before we get this 14 to 200-day average, any like golden crosses in that range, what we're going to be looking at is if we're able to break into this zone somewhere before we reach our next resistance point, somewhere between low 16 cents range to around low 17 cents range. So that's going to give us that range here. But the beautiful thing is, like I said, this zone typically fills relatively quickly. So for those of you trying to get like a time spectrum on, you know, whether we're going to like retest some of the previous highs here for this cycle, we're not necessarily far out from that, but just wanted to just look at some of the micro zones here before we get into that zone. Now, I will say also, if we're able to break into this main zone here, then I'll open up that discussion as far as for like 22 cents, and we'll start looking at some of those higher levels. But and maybe I'll make a separate video and we can discuss some theories on that. But for now, I wanted to focus on this next zone here and breaking into that. But the beautiful thing, like I said, is we're looking at a gap zone. So a lot of volume typically rushes in here, and we're going to be able typically to get out of this relatively quickly. So what we're looking at now, like I said, we don't have to necessarily break above this 382 mark. And, you know, even if we gather here or do a couple retests, it's not the end of the world. It's just important that we are looking at the camaraderie that we have here with Dogecoin's relationship to the top 10. For those of you who follow my channel, you know that that's something I track very carefully and often look at, is the relationship between Doge and the other coins. I like mirroring the charts, making sure that it's staying on pattern and there's not any deviations, anything like that, because as we move and go deeper into this cycle here, and possibly, you know, this could be the ascension that gets us into peak bull run, that relationship is going to matter even more as far as replacement and also liquidity that's coming into the coin. So I'm going to switch over here so that we can take a look really quickly. You should be able to see coin market cap. This is a free site. For those of you who are just tuning in, everyone should have access to this, especially if you're new. But what we're looking at here overall, obviously, is going to be Bitcoin leading the charge. That's going to be a big indicator of liquidity coming into the market as Bitcoin is looking to fill or retest that $70,000 mark. That's going to be really big as far as for its relationship to Doge and Doge breaking into new highs. So as that liquidity comes in, that's something you can look for as well. I know a lot of you have notifications on, whether that be from Robinhood or Coinbase, whatever a website you're holding your coins from. Typically, as it breaks daily highs or daily lows or starts trending, you'll typically see these notifications pop up on your phone. So kind of keep an eye on that. Don't necessarily just focus. I know a lot of you are Dogecoin holders. Don't necessarily focus on Dogecoin. I would encourage you to look at Bitcoin as well, especially as it's getting near this 70,000 mark, because that's going to be another tell for the liquidity coming into the market. But overall, yeah, we're looking at similar patterns here. We'll see like the flat line, and then with ascension overall still green. BNB, Solana is following as well. The stable coins, Tether, USBC, you can excuse them, but you'll have these overall trends here. I do like the aggressiveness from Doge because you can see the liquidity coming in here, and it's a deviation, but it's to the upside, right? So because you can see Bitcoin here, it's a little bit flatter, right? Um, but you'll see like the aggressiveness overall from Doge here. You can see the evidence of that as well. The 7-day percentage for Doge is 28.60%, while Bitcoin is 10%. So Dogecoin, percentage-wise, you're looking at around 3 times what Bitcoin has put up in the last week, right? So overall, green day, not necessarily green day, but green across the market. A lot of volume coming in, and I think this is going to be one of the areas that we're going to have to look forward to keeping an eye on, right? As long as that liquidity is coming in there and there's not necessarily a deviation, especially to the downside, that means that when we have this push, we go into peak bull run. Just to kind of explain what I mean by deviation, typically what that means is capital is being allocated to these coins. So our institutional money is coming in. They're looking at typically percentages. What coin is going to hold what weight, and if you start to see strong deviations, typically that means that they either are no longer interested in an asset, or they believe that the risk reward ratio isn't there, so they're going to start to decrease and increase in another. But as long as we're trending, all that kind of stuff, it is absolutely great. That means that we're going to have the push from the retail sector and the big money from the institutional sector, and that's where things kind of come together and things get really beautiful. Things get really interesting as far as for price discovery, going into new zones, retesting, and really just having the capability of shocking people as far as to where things can go. So all that is absolutely looking fantastic. I'm liking what I'm seeing here. We're going to keep an eye on this. I'm going to go back to the charts. We're going to keep an eye on everything because as we're ascending, obviously the next thing we're going to have to look for is the 14 and the 200. That's this yellow line, and the red line here. Yellow line is the 14, red is the 200, and then things can get really, really, really interesting. Like if we're talking about like late December, January, when we're getting to that historic side of saying, okay, well, this is going to be, we're talking about like peak bull run, blow off tops and stuff like that. We can start discussing, maybe like a 72 and a 200 crossing, and that's going to be a really, really good signal there. But obviously, we'll have to see some leaps to the upside here, so we'll be much higher than these price points that we're seeing now to get that cross. So we'll see it coming, but it's still just a confirmation before you get there. Kind of like what we see here with the 14 and the 200. We see it coming. We can see the gap here. We can see it narrowing. We almost got it here, right? With 14 and the 200 and the 72, and then we got the rejection here. But we can see it coming here. We can see that gap narrowing. So you kind of get an idea before it happens to say, hey, we're on the verge of a breakout here, and also we're in the middle of an uptrend. So you can see it coming, but it just kind of gets you prepared. So if you wanted to make any adjustments or stay tuned to see where things are going. I know some people are just watching because they believe that, I know it's a split in the community between us having peaked already and it's just going to go back down. It's another flash crash. But overall, like I said, with these zones here, this is going to be very telling. And you can see here as well, let's look at this. Just notice this here from July 22nd up until now. You can see kind of like the hills in the valley here as far as it's filling this bowl. So breaking out here is going to be at least this zone. I'm going to say here because I don't want to put that pressure on that, because I know that can be interpreted as we need this to happen today. But breaking out here and breaking into this zone here is going to be monumental for setting up that movement and that tick to the upside. So keep that in mind. For those of you that are watching, I will check in later, and we can talk about some of the longer term, I'll say longer near term price action here with some slightly higher price targets, and we can have that discussion as well. So if you like anything that you've heard today in this video, please consider subscribing to the channel. Let me know your thoughts in the comment section below. I appreciate all of you, and I will see you guys in the next video.